Well, welcome to the 2025 wrap-up here with Reventon Team and Associates.
Hi, I'm James. I'm the Head of Sales for Reventon Residential. Just a quick update for 2025. Post-election and with the interest rate reductions, we've seen a significant swing in terms of values and in terms of a reduction in time on market and residential sales. It's been a really good news for owners, both buying and selling at the moment.
It's been a strong market now with a lot of people going through, correct?
It has, yes.
What are some of the things you'll say to the buyers that are looking at getting into the market now?
Look, there's never been a better time to get into the market. We're not quite at that point where the market's gone all the way up. So there's still an opportunity to buy now and see growth in this particular cycle. A lot of people will wait until they find out in the newspapers that the market's gone up. By that point, you've already missed out. You're going to wait your 7 to 10 years before you see your growth. There's still opportunity right now, and probably for the next 6 months. There's a lot of negativity still in the newspapers, but it's not reflected in people coming through the doors.
So if people are talking about it, you've probably missed the boat.
Absolutely.
Go speak to a good expert like yourself. Come to Reventon and we can show you exactly how to get into the market at the right time to make money.
Perfect.
Josh, who heads up the property management division, tell us what you're seeing out there on the market.
The rental legislation that came into effect from November 2025, we're seeing a lot of changes, especially in the rentals. A lot of rental providers, they are quite pressurized with the effect with these changes, but we have everything covered up. So we're making sure that the rental laws are up to date, our systems, policies, procedures all are up to date, and our team have had a good training session as well.
So compliance, obviously very, very important, which is very, very good. Do you think it's affecting the buyers more or the tenants more or both?
I would say both, especially with the investors. They have been getting pressurized, but as I said, it's very good to choose the right rental provider agencies, so that they can manage their properties well from start to end. So,
and I know at Reventon we've spent a lot of time making sure we understand exactly the requirements that are coming in November to make sure that we're not only compliant, but we're delivering a great customer service.
That's correct. Absolutely.
Which is very, very important. And Lachlan, who's the head of sales at Reventon, tell us a bit about what you're seeing in the market, some areas which are strong and what you're seeing for 2026.
Inquiries picked up through the roof recently. Our sales associates are flat out calling all about inbound inquiry. We're doing record numbers at the moment. I don't think we're alone in that. I think that's a reflection of the real estate market.
What do you think that is?
Well, I think there's a lot more confidence that's come back into the market now that we've had 3 interest rate cuts this year. Over the last couple of months, it's actually the first time in 4 years that we're seeing all capital cities grow at the same time, which has not been something we've seen in recent times. I know the Australian Financial Review came out last week and had property buyer sentiment at a 15-year high. So over the last 15 years...
Medium house price now, $1 million. So all capital cities have grown. It's such a positive thing, but still important to get good advice because there's certain pockets that are growing better than others. And we've seen some amazing growth for our clients, 3x than the average capital growth and some almost 6 times.
Yeah,
the nation saying.
Well, I think our price point, our investor price point, 550 to 750, has performed really well. We're finding that this price point is actually outperforming the premium end of the market. That's obviously through to not just interest rate reductions, but also all the first homeowner grants that are coming in across Australia. So it's really supporting more and more people get into the market at that price point. We've obviously had a lot of success, as you've touched on, over the last 3 years. We've averaged 16% growth per annum, which is about 3 times the national average. We've had a lot of success this year in 2025. Start of the year, we're helping clients get into Frankston, finding 3-bed, 1-bath, brick homes on sizable blocks for around $750,000. Those properties today are now worth over $900,000. So those clients have seen, upwards of 15% growth in just 12 months, which has been amazing here in Victoria. We've also had a lot of success in the last few years over in Perth. We're helping clients get into Perth, for 4-bedroom homes less than 3 years ago for $550,000. We're now seeing bank valuations back for those properties at close to $800,000.
So we're talking $250,000, which represents close to 50% growth in over a couple of years. I think it's important to note, although it's a very, very buoyant market, our research is very, very prominent at Reventon. We go to different states in the country. You take your team down there to make sure that we're dealing with builders, the developers. Yeah. We're looking at the blocks of land. They're delivering their projects, their house and lands on time. And I think that's so important that you're on the ground in every area that we're selling. And another key difference is we don't just sell new builds. We obviously do buyers advocacy, which is very strong as well.
I think we're a lot different to our competitors. It's truly a tailored approach. Our view is that there's a few different ways that you can make money through property investment. It's more importantly that it's done correctly than what type of property it is. I think where we have been very successful is it is borderless, what we do. We don't bring any emotion into it. It's not about buying an investment property where you might move one day or you might holiday in one day or your kids might live in one day. I feel like that's where a lot of people go wrong is they shrink the pool of what they can select from based off emotion.
They're buying with emotion and logic.
What we do is data driven. We've got a research team that look at data from data companies. Over 20 years, we've worked out what trends indicate that an area is ripe for capital growth. And because we're data driven and because we don't put emotion into our investment decisions, I think is why we've so consistently delivered above average results.
And I think it's important to note as well, as James was saying before, if someone's talking about an area and it's growing so well, you probably missed that 9 o'clock on the property clock, that emerging market, those 4 indicators. And what we've been very successful is identifying when the property is going to grow, when the emerging market's there.
Well, that's what's so important. We just talked about how successful Perth's been over the last few years and how our clients have made so much money there. Would we put our clients in there right now after it's seen $300,000 worth of growth over the last 2 or 3 years? Probably not. It's seen most of the growth it's going to see in this current wave of growth. We're now looking for areas that are just coming off the bottom of the market now. They've seen very little growth over the last few years. The data is showing that the markets are just starting to pick up now, and then they've got a full wave of growth ahead of them over the next few years.
And I think it's important to note that when the properties grow 300,000, the rents don't grow by $30 either. They grow a lot less. So the rental yields change. As the property prices go up, the rental yield gets lower and lower, which means the holding costs increase. Now, obviously, to show that we always pick winning areas, before Perth, we were in Adelaide. Again, same story. They saw great money. Before that, Southeast Queensland. Before that, regional Victoria. So we're, for the last over 15 years, been picking winner after winner due to our research.
Correct. Absolutely. I think one of the things that we look at very closely here as an investment team is what we call CAGR, which is compound annual growth rate. We're looking for areas that haven't just seen a lot of growth over the last 12 months or 3 years. We're looking at areas that have performed really well over the last 10 years. So we're looking for areas that have a really strong...
Why is that so important?
Well, because as we've touched on, markets are cyclical, okay? And there can be some areas that have performed really well over a 12 or 24-month period. For us, that's not data that supports long-term investment. What we're looking for is areas that have shown a track record of long-term growth. You know, as a typical area will grow 5 or 5.5% per annum over a 10-year period. The areas that we're investing in right now, they've got CAGRs of upwards of 7 to 8%, which shows us that it's an area that can support long-term capital growth.
You mentioned it before as well. It's super, super important. It's not just a few percent more, because when you compound that over, extrapolate over 3, 5, and 10 years, that 3% is hundreds and hundreds of thousands of dollars. That's 2 properties, 3 properties, 4 properties. So when we extrapolate that, and we've got so many clients that have bought multiple properties, 5, some have bought 10, because they're using this methodology. Other clients are using to pay off their mortgage. So what are you seeing for 2026, Lachlan?
Yeah, 2026, as I said, you know, we're really positive on where the real estate market's going. We've obviously had a few interest rate cuts last year. You know, we're seeing that people have more affordability now. We've obviously, as I mentioned, seeing it's a time where all capital cities are growing at the same time, which I've been here at Reventon for the last 5 years. I've never seen a market where all capital cities are growing at the same time. So I think I'm of the same view as the Australian Financial Review that has property buyer sentiment at a 15-year high. So we're really positive about where the market's going. We've identified a few new areas that, as I said, meet our metrics that we look for. So we've got, you know, areas with low vacancy rates, high owner occupier percentage. They've got strong rental yields.
I was about to ask you, if we've seen all capital cities grow and we're seeing record highs, why do our listeners or clients need to come to a company like Reventon then?
As I mentioned, it's really important that if you want to see fast uplift in your investments, you have to buy in the right market. It's not just about buying in the right market, it's about buying at the right time. And that's what we're really good at identifying, is the markets that are just coming off the bottom of the market, that have got a full wave of growth ahead of them over the next few years, which allows you to get into a position where you're going to see $200,000 to $300,000 worth of capital growth over a 2, 3, 4 year period. And what that does is allow you to get in a position where you've got enough equity to replicate that with a second investment property quite quickly. Where a lot of people get wrong is they buy in areas that are approaching the peak of the market. They may see some initial equity, but eventually that market will peak and it will start to decline. And those are the guys that have investment properties where after 4 or 5 years, they're worth a very similar amount than what they paid. And what that does is that really stunts their ability to continue to grow their portfolio.
To build it. And also, too, what I say to people, it's very, very important. We have 6-month reviews. So it's not a set and forget. You've bought one property in a high growth area, but in 6 months, we're going to get you to come back in 12 months. So we're kind of like Big Brother looking after your property. We'll get you into your second, your third property, making sure you've got sharp interest rates, the property management's looked after. If you need to exit that property to pay off your mortgage and to buy more property, we've got a great person that can facilitate that process too. You can do new build, you can buy buyer's advocacy. I think having the right team behind you, pulling in the right direction, is the most important thing when it comes to successful strategy.
Correct. Yeah, look, it's a tailored solution based off data. That's the most important thing that we do here at Reventon. It can be established, it can be new build. What it's going to be is tailored to your specific motivations and goals, and make sure it's the right property for you. And I think, the last point probably to touch on is you're right. With us, it is more of a long-term partnership than a transactional business. We're going to catch up every 6 months after you've settled that property purchase. And we're going to guide you on what your property's worth, what's happening in that market, and what your long-term plans should be with that particular property. I think a really good example is, we helped a lot of clients, as you mentioned, get into the Ballarat market in about 2015, 2016. We're getting clients into 4-bedroom homes there for about 300,000. Fast forward to towards the end of COVID, those properties within 4 or 5 years doubled in price to 600,000. In those reviews, we noticed that probably most of the growth that is going to be seen in Ballarat in the short term had been seen. We recommend for a lot of those properties for a lot of those clients to sell those properties, take that growth and invest in a market that's got more upside over the next few years. Helped a lot of clients buy into Brisbane at that time for 450,000. Fast forward to today, 4 or 5 years later, those $450,000 properties in Brisbane are now worth close to 850,000. They've seen $400,000 in uplift. We look back on what those Ballarat properties were worth when we told them to sell at 600,000. They'd be lucky to be worth the same amount of money now, if not a little bit less. So it's making sure that everyone's always got their money in the right places.
And working, as we said before, it's super important, having the right team pulled together in the right strategy and identifying that. Now, we called that project many years ago. Remember, Mars actually named it the Stepping Stone Project, getting into a property to find it to pay off. Now, without further ado, talking about money, talking about finance, Mr. Mars.
Yeah, so finance for 2025 has been quite interesting. I think going into the year, everyone wanted to see at least 6 or 7 rate cuts, and we've seen 3, and we've kind of paused everything at the minute. I don't think inflation figures are where they need to be for further rate cuts, and that's okay, because we're finding clients become a lot more comfortable in the mid 5s, low 5s for owner occupier properties, and mid to slightly higher 5s for investment lending. And I think that the marketplace or customers as a whole feel quite comfortable there, a lot more comfortable than they did seeing a 6 in front of their interest rate. And I think that's led to a lot more people in 2025 dipping their toe back into the market. And we're seeing that our lodgements are up considerably. I think we're doing on average, $20 million in lending per broker, of which we've got 30 or 40 brokers. So we're seeing a strong uplift in clients wanting to jump back into the market, and we're seeing a vast range of transactions where we're seeing, as you said, stepping stones, people utilizing their investment properties and selling those in order to dissolve owner-occupier debt, which will then open them up to jump back into the market with either 1 or in some cases 2 investment properties at the same time, really starting to accelerate the growth of their asset base and their wealth as a whole.
And important too, they're paying off their own debt, then they're leveraging against that asset to have maximum tax benefits because you're using it for interest for investment purposes. So the advantage is they're reducing their bad debt and they're using good debt. And as Lachlan said as well, they're paying off assets that have seen that great growth. Their rental yields aren't as good, and they're getting back into the market in high growth areas again that are emerging markets, and they're paying down their bad debt, which is super important.
It's absolutely important to growing your wealth, to be able to continuously grow your wealth over time. A lot of clients say to me, "Oh, well, I've only made $150,000 or $250,000 on this investment property," which is amazing to begin with. But we try to showcase how much they'll save in interest by paying down that bad debt or that owner-occupied debt, which doesn't derive benefits around tax return or any mechanisms related to tax that benefits the client. So we try to have clients think holistically. If you've made $200,000 on this side, and even after some capital gain, you're left with 150 as an example, how much will you save on interest by utilizing that 150 to pay down your owner-occupier debt? I think for every $100,000 that we can bring down on owner-occupier debt, you save anywhere from $60,000 to $70,000 over a 30-year term on that debt.
And it's important to review this stuff all the time. So when we mention team as well, we do our 6-month reviews, but in the first year, we'll contact the client over 40 times, and that's between client services, that's between mortgage brokers, that's between all of our professional people, be contacting, sending newsletters to making sure they're up to date. So what else are you seeing in the market? Buyer sentiment's up. We've had 3 interest rate reductions this year. It wasn't 6 what people predicted. Inflation rate's a little bit higher, so we can't really predict that we're going to have another further cut next year. I reckon it's probably going to stay or go up, but interest rates are still at a very low rate. People are forgetting that they're quite comfortable with what they're seeing.
Yeah, look, obviously there's a lot more comfort and positive sentiment in terms of how clients are feeling. I think for 2026, what we're going to see a lot of is clients entertaining more of a blended rate approach, right? People becoming
Blended rate.
well, just more so people
I know, it is
becoming
for
really,
phrases.
really hands-on with their finances. So to give you an example, blended rate on your own occupier home loan. Let's say, for instance, you've got a home loan for $1 million. Traditionally, you might split that loan up into two portions, maybe fixing a portion and leaving the other variable, really hedging your bets. Clients are becoming a lot more smarter with how they approach that type of arrangement by perhaps splitting their loan into four, right? Hedging their bets throughout the year, right? Maybe fixing in smaller portions for different lengths of time, maybe 1 year, 2 years.
Use the equity, they can control some of their interest. So obviously that comes down to having a good broker that can educate you on that process, because every situation is different and it's a bespoke service when it comes to real estate, when it comes to finance.
Absolutely. And, the last thing you want after fixing a portion of your lending is to forget about when it comes out. Our team, our systems monitor that for you. We get in front of it and ahead of it. A month out, we let you know that one of your loans is coming out of fix. Would you like to fix again? What does your blended rate look like at the moment? Where is that sitting? We really assist clients throughout and ongoing, and that's extremely important to ensuring that you are always saving money, regardless of what type of product you might be in and where throughout the rate cycle you sit.
And it's important to any strategy to be nimble and change now. And even though we're at a great time, great advice is important, because that's going to make you get into the market quicker and make even money. I've said this many, many times, all mortgage brokers aren't created equal. It's very, very important to go to someone that has experience. Now, I know you guys are probably looking at settling $2 billion next year, so you're doing a lot of transactions and you're seeing a lot. But how important is it to have a very, very well-versed and experienced broker?
It's extremely important, but even more so having a capable team supporting that broker. Our business is set up to have a team for every part of the process. Once your loan is approved, we've got an entire settlements team helping you through that process. If you're constructing, we have an entire construction team holding your hand every time you receive a progress payment. Our reviews team is set up to contact the bank on your behalf annually, ensuring that you have got the best interest rate, right? Because just like everything else in life, you forget that subscription that you've signed up for, or you forget to, renew your insurance until you receive the bill next year. We've got an entire team dedicated working for you, so that it's one of those things where if you do forget it, someone's taking. Absolutely, we do at Reventon, for sure.
Now, we talk all things money. It wouldn't be the same without our head of our finance running our accounts. What are you seeing in this year for the market, and what's some of the tips and tricks you can share with the audience to save money or to look at?
Definitely. So the most important things that are happening in the financial year 2025-2026 is the new anti-money laundering laws that are coming into effect next year. And for that, it's more about how to make workplaces better. It's not about wanting to catch anyone. It's about how ethics have evolved and how you can make your workplace even better. So for that, Australian government has designed a program called Austrac. They are constantly uploading videos and educating all the companies on how to get better, because it's becoming a law. It's very important to follow the tips and tricks from them and ensure that this compliance is ingrained in a company's social structures. That's one of the most important changes in the legislation that we're seeing at the moment. Second thing is from consumer affairs. With the amount of transactions, as you guys were saying, buyer's confidence is at an all-time high. So they are ensuring that all the trust accounting is done right. So the compliance has to be absolutely number one. And for that, consumer affairs have a hotline where they are ready to offer advice. They are ready to offer any solutions if you have any problems. So they are very much open to that. And the most important thing being, now with the changes in the market that's happening, please be open to advice. So ATO has their dedicated lifeline. They want to help people, educate them, and ensure the compliance is up to date. Consumer affairs are doing the same as well. And then one more thing that are happening in 2025 is the ATO now is looking at timeliness. Make sure all your lodgements, all the tax, everything is done on time, because the worst thing you can do is miss it. And in case where things have been missed, be upfront. ATO is encouraging people to reach out to ATO like, hey, we made this mistake. Please advise on how to get this better. So the Australian government overall is trying to help businesses become better, evolve, and be the best version of themselves going forward.
So J&J, Joshi and Jin, you're talking a lot about compliance. Now, integrity is one of our values here. So it's very, very important that you do things properly. You're constantly looking at compliance because it's always evolving and changing from November, from the ATO. And it comes down to getting the right advice to making sure that you're doing the right thing by the client, by your company, and that you're always growing. So compliance is always at the forefront of what you do. And here at Reventon, I've been here for 20 years, and that's been a very, very big focus of us. Integrity equals compliance, equals making sure that our clients are being updated. And for those out there, speak to good companies that have been around for a long time, that put an emphasis on integrity, on compliance, that understand legislation. I know you've spent a lot of time this month and last understanding what the changes are so we can inform the team, to inform our clients. And when I said before, why do you go speak to a company? It's understanding all of these things. People say you can do it yourself, but you wouldn't know as much about each aspect, from property management to where to buy, to how to sell, to where to get the loans, to how the compliance and how to put that all together. But I think the most important part is starting with a conversation. So our first point of call is what we call discovery piece, to understand exactly what the client, what you are trying to achieve, how to pay off your mortgage, how to reduce your tax and really build wealth. Put that together, and then your team's pulling in the right direction. When you've got 4 or 5 professionals that are giving you separate advice, you're never going to get the best holistic outcome. And when your plans change every 6 months, we document it and we roll with the punches and really make sure that our clients can build wealth now and for generations to come. To go back to the start, James, 2026, what are you hoping to see in the market, and what can you tell our listeners?
Well, look, I think it's been great, obviously, hearing everyone else's sort of feedback here as well, because I think what's most important to me at the coalface is consumer confidence. Whether we get more interest rate rises or drops, it doesn't really matter. As long as confidence remains this high, people are much more confident stepping forward, putting an offer in, knowing that wherever they're buying into the market, the future for 2026 looks good. And the old saying in real estate, the only bad time to buy a property is tomorrow. Right time is today. If you can't buy yesterday, buy it today, because at the moment we are in a growth cycle for just about every segment of the market. So the right time to make a strong decision is now.
So Joshi, back to you. What are you expecting for 2026? What are you hoping for?
So in property management, it's definitely been tougher and tougher with all the rental laws, with all the legislation that came into effect. For the investor, as much as it's important to choose the good sales agent throughout the process, it's also very important to choose the right property manager. So basically, what we will be doing is, and what we have started doing is, to make sure that they are protected from every aspect.
When you say they, the tenants, the landlords,
from
both?
The landlords, both, everyone.
Of course, just to clarify.
So everyone are protected. So basically, in terms of talking about the rental providers, how they are protected is what we pride ourselves is it's been 2 months that we've been walking around with our processes, policies and procedures. We have updated every single thing. We have notified our rental providers, notified the renters, making sure that both of their rights and responsibilities and duties are safeguarded. That's what we work on. We want to be more ethical in terms of our practices, how we approach our customers, how we approach our clients, and how we approach for the new business.
So you mean, when you refer to more ethical, you mean you want best in class. You want to make sure that we're adhering to everything.
That's right.
Now, another thing we mentioned, team, we make sure that your rent is exactly what it needs to be from a market value perspective. So we do our rent reviews regularly as well, and make sure that your investment is looked after.
100%.
Now, obviously, Jin, we would be remiss of me to not discuss your favorite topic, which is savings.
Absolutely.
So tell us a little bit about 2026 and some things that you're going to recommend people to do for their savings as well.
Absolutely. I think Christmas is absolutely the best time to get your pen to the paper, sit down.
Spend money?
Absolutely. And save money. So main thing would be, during this time when everything is quiet, make a list of all your suppliers, make a list of all your contracts, go through the documents when the time is actually quiet, use it very effectively so you can actually plan your 2026 ahead. If you need to negotiate your contracts, this is the best time when things are quiet. This is what me and Chris are going to sit down over Christmas period. Chris, you're working on the Christmas day as well, just so you know.
Doesn't bother me.
So we are going to be going through all the contracts with our suppliers, developers, builders, lawyers, ensuring everything is covered, ensuring we are making the best use of our time, all the resources, as Joshi was saying, compliance. We're going to have a chat with the auditors, ensuring that the compliance is done quarterly, everything is up to date. all the suppliers, making sure that all the money is tight. Because one thing that Chris always says is $1 saved is $3 made.
I was going to say that. Yeah, that's correct.
Absolutely. So that is very vital. Ensure that you are accounting for every single penny, even if it means that you save $1 on your phone contracts, it's worth it.
It's $3 that you have to earn, but it's a very, very good time to review everything and negotiate things. And all of our contracts we look at, and we make sure we stay on top of everything from our suppliers to our developers, for our clients as well. And yeah, every dollar you save is very, very important because it can go towards your mortgage. It can go towards a number of things. It might be to save up for a holiday, but it's what I call conscious spending and conscious saving to really position yourself. And I know that we do that. And I recommend everyone every 3-6 months to be looking at their life plan, their budget, not a nice word, but whatever you want to use to ensure that you're maximizing what you're doing. And that's why reviews are so important, because it holds the clients and it holds our customers accountable to what we said, to ensure that they are paying off their mortgage, building their wealth, and really going into the market, which I know that with the software that you've shown as well, Lachlan, it really visualize exactly what their plan is. And also people's plans change. I have a kid, I'm going to university, I'm traveling, I'm buying a new car. You need to be nimble with that. You also need to be accountable. And that's why the reviews are so important. We've got a lot of success on our clients coming back in and showing them what we've been able to do for them and buying more property.
Yeah, look, we're really excited about the new software we've implemented. So we've got new software. It's called the Reventon Portfolio Blueprint software. And what that software allows us to do is visually demonstrate to our clients the impact of property investment over a long period of time. Big goal for a lot of our clients is financial freedom or passive income, where basically we're able to help them grow property portfolios that can replace their income through their role. And we're visually able to demonstrate to clients now how, by investing correctly over the next 5 to 10 years, and get them into a position or over the next 20 years, they've been able to replace their income through property investment. So, that's a really exciting tool that we're excited to roll out to all of our clients here at Reventon.
And super happy to. I know that our client experience is one of our values as well. Super important. We've just passed over 600 5-star Google reviews. So we're very, very proud of the success our clients are seeing.
Mm-hmm.
As a business, we've had an absolutely stellar year. We've won 16 major awards. And I'll say one that we're super proud of. Great place to work with a 96% rating. Average in the industry, just the benchmark, it is 60%. And all the awards that we're winning for community work and everything else, I think is a testament to our client results and the hard work of our team.
Yeah, correct. And I think the other thing about the software that we didn't touch on, I'm not sure if I've told you this yet, but it's actually just hooked up to a program which allows our clients to get up-to-date information about what all their properties are worth. So we talked about how we catch up every 6 months in the portfolio review to give our clients updates on their values of their properties. With our software moving forwards, they're going to be able to log into our platform and get a live update on what all of their properties are worth, so they can see their equity position, what their properties are worth, and the software also has a lot of other great tools for them to assess the performance of their property.
So, last question, a wrap up. What 2025 and what can you tell our listeners for 2026?
Yeah, look, 2025 has been a really strong year. We've averaged 16% capital growth over the last 12 months.
And in some areas, almost 30, but
yeah.
average, yeah.
On average, 16% capital growth. I think the average property nationally here in Australia grew by 5.5% this year. So it's about 3 times the national average, which is great. As I said, we've now got our clients where a lot of our clients are in a really strong equity position. So we look forward to our portfolio reviews. Myself and Mars work on a lot of deals together, myself with the property and Mars with the finance. I know from reviews that we've done over the last few weeks, we've got clients that have invested over the last couple of years that are now in a really strong equity position, where we can start to look at what their best options are moving forwards. If they've got the capacity to invest again, I think it's a really good time to do so. If not, perhaps some of those markets may be approaching the peak of the market now, and it may be a good time to sell, pay off some of their owner-occupier debt, and as Mars mentioned, then be in a position to go out and buy 1 or 2 new investments that are in areas that earlier in their current growth wave and probably have more upside ahead of them over the next few years.
Stay active in 2026.
Yep.
And making sure that's why the reviews are so important, that your strategy is nimble and robust. Now, I have to share it because I love sharing great stories. You told me I had a client recently that bought over 5 properties in a very short period of time.
Yeah.
Came to you for your buyer's advocacy service. They bought 5 in how long? Front to back.
Correct. Yeah. So we've had a client, a Sydney-based client. Sort of he saw some value in the Melbourne market, and he noticed that all of these other capital cities had grown significantly over the last few years. He saw that Melbourne, had dropped back in price, and he thought, Melbourne's a big capital city. It's got a strong economic output, really strong population growth, and he thought it was a good time to get into that Melbourne market. Look, he's a little bit different to a lot of our clients. He was in a very strong financial position. His brief to me was to help him find properties that he could add value to through renovation. So we looked for properties where their current condition allowed us to secure them under market value, and where the floor plan and the property supported the opportunity to add value through renovation. Typically, when you're wanting to add value through renovation, you're wanting to add bedrooms or add bathrooms to increase value.
Which they make over paint and make it look a bit
but
better.
look, ideally you don't want to extend. That's where a lot of the money is in the renovation. You want to keep it under the existing roof line. So we found him a lot of properties that allowed him that opportunity. He's made some really good money.
Front to back, when did he buy his first? When did he buy his fifth? Time frame.
Yeah, all within 12 months. So 5 properties within 12 months.
And sort of upside, how much money you've made?
Yeah, look, already some of them it's just finished the renovation, others are still going through the renovation. But, I know that the first property that we worked on him with, that property grew by about 250,000.
So ballpark on the 5, give me a range. How much in 12 months he came to you with a brief to buy property, find properties in Melbourne?
Yeah.
How much would he have made?
Well, look, it's probably hard
Average
to say exact, but I think across the 5 properties, he'd probably be at least $500,000 up over the last 12 months. But the more important thing is not just the money he's added through the renovation. He's got a really strong foothold in the Melbourne market. And as it picks up over the next few years, he's obviously going to experience some significant growth out of that portfolio.
So again, I've mentioned it multiple times, staying active in the market, going to your reviews, having professionals stay on top of everything. Why don't you do it yourself? Look at the benefits to having a great experienced team. And finally, Mars, finish off 2025 and give us something for 2026.
Yeah, look, for 2026, like the rest of you watching at home, we want to see interest rates come down. But if they don't, we want to help educate our clients, showcase some different ways that they'll be able to pay their mortgages down a lot sooner. There's a lot of people out there that might have investment properties that aren't utilizing tax variation forms correctly. That can put a lot of money back in your pocket on a weekly, fortnightly, or monthly basis, depending on how you get paid. And a lot of people probably heard tax variation form and thought, well, what is that, right? So we want to educate our clients. We want to show them different ways that they can save money, even if there's no further interest rate cuts, right? Whether it be a blended rate approach, showcasing ways to make extra payments, or using those tax variation forms to their advantage. We want 2026 to be the year of education, ensuring that whoever comes through and speaks to Reventon in any capacity, that we can show you how to save as much money along the way, whether that be at a new lender or your existing lender. And that's what it's going to be about.
The reason it's so important, and also we have a great association with the great accounting companies as well. Tax variation form is a mechanism which allows you to get your tax back on a weekly, fortnightly, or monthly basis, depending on your pay cycle, and it can sit in your mortgage or offset account. Now, the reason that this is very, very important is because interest is calculated daily. So by having this money sitting in the mortgage, you are saving so much more money than getting a lump sum at the end of the year. And typically what happens, if you get a lump sum at the end of the year, say 7 to 10 grand, what do people do? They've got a free win. They'll go spend it on a holiday, spend it somewhere else. Not saying that's a bad thing, but the purpose of investing is to use that money, set and forget, save the tax, put it on your mortgage or offset account, and you'll be saving so much on your mortgage, which compounds on your first property, your second, third, fourth, and fifth. And that's why at Reventon, it's so important that we educate our clients on all of these things, and they make conscious decisions on where they can invest. It's been an amazing 2025. 2026 is going to be even better. I'd encourage you and invite you to pick up the phones or contact us online at reventon.com.au, and we'll look forward to having a chat to you. Merry Christmas and Happy New Year. Stay safe. So on behalf of myself and my awesome team, hope you've had a great 2025. Have a safe Merry Christmas, Happy New Year. 2026, we'll look forward to talking to you at Reventon. Thank you.